Let's do it live.
F it.
All right, so yeah, Tesla is selling off. We're going to talk about the Tesla dip. Our thoughts on buying the dip, not financial advice. Thoughts on Tesla's quarter, the new Model Y. Talking a little bit about OpenAI drama and more. So let's get right to it. Matt, on the earnings call, it was surprising that Wall Street didn't ask about the Model Y changeover, nor did management really highlight the re-ramping of the new model and the impact that would have to Tesla's first quarter. So could you talk a little bit about that?
Yeah, happy to. So this is something that we found a bit I don't want to say perplexing, but obviously refreshing the Model Y, very good news, right? It's going to be even better. It's the world's best-selling car. We all know all that. But in the short term, I think it does present a few pretty significant headwinds that nobody talked about, as you were kind of teeing up there. So first is, this is their highest selling vehicle. So whenever you have these line changeovers like we've had in the past, like Model 3, going down for the refresh, or even the S and X, it was like, it wasn't the Model Y, so it wasn't that big of a deal. But the Model Y being the highest volume platform, the impact of having that line down is pretty significant. And then on top of that, you're doing all 4 plants at once. So like, it's pretty impressive just logistically and from a supply chain perspective that they could do this. But you are taking a pretty steep dose of medicine when you are going to be down your most profitable line worldwide, 4 different lines essentially, or factories that have multiple lines in some cases. So it just seems to us that the deliveries, the production for sure, and then as a result of that, the deliveries will take a pretty significant hit in Q1. Then your margins will certainly take a hit, and margins weren't really that spectacular in Q4 to begin with. But you're taking down your most profitable line from all those factories. And you're probably, even if they have a really impressive kind of changeover and they're ramping up pretty quickly with the revamped Model Y, there's going to be some hiccups. There's going to be a few things that just aren't, humming along as smoothly as I'm sure they'd like, at least early on in that ramp. And so when we're just looking at Q1 in particular, looking to us like it's probably going to be significantly worse than Wall Street was expecting, both in terms of deliveries and in terms of earnings per share. So we were doing a little bit of kind of modeling around that, and we're discussing that with some clients earlier this week. But yeah, it's something I don't think is getting a lot of attention, which is concerning to us, at least in the short term.
Yeah, and we're likely off by a wide margin, but if you think about the Model Y, essentially they were doing 300,000 Model Y per quarter, roughly. So 1.2 million a year. They definitely did 1.2 million in 2023. Maybe it's 1.1 this last year. Potentially the Model Y could be down more than 100,000 this quarter. And I think psychologically people aren't just ready. They aren't ready for that. I think.
You think that low, really? I mean, it's really hard to peg this, but 100,000 would be pretty bad for Model Y alone. I would really hope
down 100,000, not down.
Oh, down. I thought you were saying 100,000 total. I was like, well, that's really kind of
down at least 100,000. It could be worse. What's shocking to me is Joe Tickmeyer just showed that they had just pulled out some of the paint equipment for the old Model Y line from Giga Texas. So it seems like that's a bit delayed. I'm curious to see where it turns up, but it's, Wall Street didn't talk about it on the call. Tesla didn't talk about it. People aren't really ready for it, but I think like there's this general unease, and I think that's why the main reason why Tesla stock has been selling off, and there I think it's going to be blamed on the wrong things. Like it's a lack of supply. And the new Model Y is going to be in huge demand. It was Osborne last year. I think that's why Tesla's sales didn't grow much. I think they would have grown otherwise.
Yeah, and blaming it on the wrong thing. I mean, we're already kind of seeing that with the, Germany headlines, right? It's like, oh, Elon's supporting AFD, this far right-wing group, and that's why like German boycott is so strong and Canadians hate Elon. And so, exports are like super low and they're going to get all these tariffs. Like there's all these kind of doom-saying commentary that's going on right now, all about how Elon is really tanking sales and getting his customers really pissed off, and all these sorts of things, which I'm sure have a kernel of truth to them. But what actually matters is that the customers are now aware that there's this new Model Y. So even if you want one today, you want to buy one of the the older versions, you're going to have significant discount on it. So like that's going to hurt margins also. But like for the most part, like you're just not producing. I mean, the earliest deliveries are going to begin in March, at least here in the United States. I think China's going to be a little bit earlier. So that like is very clearly going to impact demand, or at least your delivered numbers for Q1 and for these next couple months. So I would just encourage everyone to take all these headlines about like how Elon is tanking the brand or whatever with a grain of salt and realize like they're doing a major changeover of their most popular vehicle, the world's most popular vehicle, globally, like all at the same time. And so like we do think it'll take some time for everyone to kind of realize that, and the stock might continue to slide from here. Not financial advice, but it wouldn't really surprise us if that happens, based on the fact that like we had to pretty significantly reduce our own estimates for both deliveries and for earnings per share, and we're coming up with something that's a lot lower than where the Wall Street consensus is right now. And so we think as more and more kind of analysts come to that consensus, that might have some negative repercussions. But keep in mind, this is like quarterly results. This at the end of the day, like when it gets to Q2 and beyond, and they've relaunched and are running at close to a really nice run rate with what is an amazing vehicle. I think from there on, we're going to be in a completely different situation.
Yeah. So Paulo says, go ahead and throw that on the screen. The German Tesla boycott is real. I personally know 4 families that switched away from Tesla just before they ordered because of AFD support. We'll see.
So, I mean, again, like I said, I'm sure there is some, maybe even more than a kernel of truth to this. I was a bit surprised by how significant the Canadian reaction was to just like Americans in general, like booing the national anthem at that hockey game and a few other things like that. And, some of the Canadian accounts I follow on the ground who are like somewhat nuanced in their views and kind of understand what Elon is doing, and maybe they don't agree with everything, but like they're kind of reporting that there's widespread kind of anti-American bias as a result of these, Trump tariffs and everything that's happened. So I do think that this is potentially a real demand, hit or at least impact. I think there will be some, conservatives on the other side who maybe had never considered a Tesla before, and exactly how that math all, shakes out, I'm not exactly sure.
Let's throw that next one up. Go ahead, Matt.
Hey, Dave. So Dave says, what do you think will reverse the current downtrend? How far down do you think it will go? Man, it's always hard to kind of guess these things. Bradford, you're a little bit more into the technicals, than I am, just in terms of looking at that. So I know you've thrown out a number of how far you think it could go down. Do you want to kind of share that, or is that more for internal analysis?
Yeah, so this doesn't necessarily mean we're going to do anything at this number, but at 270, the stock after the earnings in October, it shot up to 273. Then it drifted down before the election. So I wouldn't be surprised if it were to test that 270 level again. Of course, after the election, so the election got us up to like 340 and it hung out there. It seems like 340 was a new support, but definitely cracked down on that today. We'll see what it does tomorrow. And then it shot up from there off of the back of the great version 13 FSD news and how good version 13 is. As Matt was starting to say, like ultimately this is one quarter. We're more excited about the autonomous future for Tesla and how this trial is going to go in Austin, how quickly Tesla is going to roll out from Austin. They certainly have a lot of learning to do, and it's going to be interesting to see what they do. Go ahead, Matt.
Yeah, well, I was going to say that was the other part of Dave's question was, what do you think breaks this downtrend? So, I think we very well might have some kind of continued panic as analysts, look at Q1 with a little bit more of a fine-tooth comb and say, oh, like, shoot, this is actually really bad. And, if the production and delivery report starts with a 3 handle and analysts were not expecting it, that would cause some alarm bells to go off. But ultimately,
it seems like Wall Street needs like a special handholding tour from the CFO. Like, oh, we met Tesla in Antarctica, and we just realized that
Antarctica. Why Antarctica?
I just made that up.
Okay.
They have like these factory tours, and then like suddenly they realize something that's been obvious to all of us all along.
Yeah.
I
think that's certainly true, and Tesla's a lot more driven by institutional buying now than it was in 2019 or so, where there was a lot more kind of retail presence. But ultimately, I think autonomy is the story. I think that is what breaks this downtrend. I mean, the rate of improvement, they're essentially every step of the way. I think it was October, maybe September, when Tesla AI started posting about getting safer than humans by Q2 of 2025. Herbert in the house. What's up, Herbert? And like that timeline, I will admit at the time just seemed bananas to me because like they've had all these improvements and not many of them were like a 10x improvement. And they were basically saying they were going to have like 3 10x improvements in a row within like 7 months, I think it was at the time or so, or a little bit longer than that, but more like 9 months. And that just seemed a little bit like a stretch, but we've seen them kind of continue to execute on that. And where we are with the latest on 13, I forget what dot release it is. But like they're well on their way, and they just continue to kind of reiterate that. And essentially by saying that they're going to launch Robotaxi in Austin in June, they're again reiterating that they are seeing line of sight to significantly safer than humans by, call it, late Q2. And I don't think the market can ignore that if they actually deliver that. And you and I are just like, and everyone is not having any interventions on version 13 on hardware for cars. Like if they basically solved it at that point, I don't think the stock has any business being, in the sub 300, let alone, or sub 400, let alone sub 300 at that point. That'd be my kind of take on it. Again, not investment advice, but that's, to me, it's way more important, that they solve autonomy than whatever happens with Q1.
Yeah. I think what breaks it is just a culmination and bearishness, just capitulation. You're still hearing people saying, buy the dip. So I think it may drag on longer. It could just sell off until like right before production and delivery numbers, and then like that might be the bottom, like right before the numbers come out. Even if they're really bad, it could be sell the rumor, by the news, even though like the news might be really bad. But it's just not going to play well in the media. I just think the psychology is too much. So
well, and you and I could write these stories, right? Of like what are the reporters going to say about how Elon is tanking the brand and all this, like, and again, it's not like there's no kernel of truth to those, but it's like very obvious what the narrative is going to be. And so it wouldn't surprise us if that catches some people off guard, and there's some more selling, despite how excited we are about what's happening with autonomy.
So Herbert says, I drove 8 hours from Seattle to Vancouver and back on FSD v13.2 hardware 4. We'll call it AI 4 because it's so good. Flawless, no disengagements.
Yeah, and that's been my experience driving your
Yeah.
AI 4 cars versus my peasant hardware 3 car. That's why I ordered the Model X. I take delivery Friday. I'm actually super excited about that. But yeah, I mean, it's so good now. I mean, Herbert's not one to exaggerate on those sorts of things. I think everybody takes like Omar and Holmar is. I guess he's the same guy. Everyone takes Omar with a grain of salt because he's always been talking about no engagement or no disengagement drives for a long time. But now, like all the kind of middle of the road people are basically just saying like, yeah, this is like basically flawless. Couple like minor issues here or there, but certainly no safety critical interventions. And there was even this one safety critical. There was this report of this Cybertruck that smashed into a pole. It's like, oh man, like. Yeah, that's the first kind of accident that I'd heard about. They're bound to happen, but unfortunate. Then you come to see that the same account actually talked about how they crashed their Cybertruck and hit the crumple zone 1 month ago. And so you're like, oh, this is actually like probably like a shady account. So even that one accident, which seemed like it was a real V13 issue with like safety critical issue, even that was probably not accurate based on
I was a little confused. So I think he was just showing him hitting the pole. So I think it like not only jumped the curb but also hit a pole.
Well, that's what he was saying, but he said that was yesterday, I think it was. But then Warren was digging through his posts because this was some account that nobody was really following, at least to my knowledge. And he was talking about how his Cybertruck had an accident and the crumple zone worked great, and that was just 1 month ago. Like, unless this is just some like straight actor who like crashed and like crumpled a Cybertruck and then got another one 1 month later, and then FSD actually did this, that's possible. But to me, the more likely explanation is this is some non-trustworthy kind of troll type of account.
I will say that I have had my Cybertruck do multiple curbings. So the Cybertruck is not as good. So that does need a bit of work. The other AI4 cars seem to not have that problem as much.
Cybertruck has to realize it has hips.
It's got some hips. It's a big, beautiful ballerina.
Wow. I haven't heard that one before.
All right. So let's get into a little OpenAI drama. Matt is frozen for a second. His internet kind of like it hangs out for a bit. So what we had happen was it appears that Sam Altman is trying to do some kind of for-profit conversion. He's denied this. He's denied the for-profit conversion. Now Matt's live again. And he's trying to do this around $40 billion. Elon doesn't want this to happen. He's trying to block Sam from doing this. So he put in a bid of 97 some billion dollars for the nonprofit assets of OpenAI, which would basically force them to either sell it to Elon, give him control, or they got to figure out how to how to pay more for it. And it's really money that Sam doesn't have. It's kind of an awkward situation. And allegedly, the previous round that OpenAI had, there's a stipulation that if they don't make this for-profit conversion and within 2 years, that they'll somehow have to give the money back. And I don't think they have the ability to give money back to for the equity people that round, because the money's spent. It's spent on compute with NVIDIA. Matt, what are some of your thoughts with this? And we can get into let's get into how Elon funds this, or what happens if they call us bluff next. But what are your thoughts at first blush?
So my first reaction, and Tesla Boomer Mama had a great thread on this, but basically, I think it is a bluff from Elon in the sense that he's not actually wanting to buy OpenAI or the nonprofit part of it, but by putting in like a bona fide bid for the nonprofit assets, he's establishing like a watermark of like, hey, it's not some illiquid, entity that you have to kind of just take a stab at what it's worth. If you are going to, basically take some of the assets out of the nonprofit and put them into a for-profit, you have to, compensate the nonprofit entity for that. And by Elon saying, okay, I'm going to offer you 97 billion for that, it's like now you're really like kind of putting Altman and company in between a rock and a hard place where ideally they'd like to lowball that as much as possible and maybe put in 10, 20 billion dollars, it's compensation to the nonprofit and give them some minority shareholder on the for-profit entity. Try to do that in a cashless sort of way so that you can kind of continue to grow the business, and they don't have cash, like you said. So I think that was kind of the playbook that Altman was trying to conceive. And if instead, the entire business is worth, let's call it $100 billion, and there's an offer at 97, then like essentially the nonprofit is going to be, the lion's share of all of the value of the entity. So yeah, it definitely screws over Sam. I think, he's really playing this off, I think, in a like, oh, silly Elon. And I don't know if you saw, he made some comments about like, oh, I feel bad for him. He's not a happy human being and like all this stuff, obviously joking about buying Twitter for $9.7 billion. But like, this is a very serious, I think, legal maneuver that Elon and the rest of the bidders in this deal are offering that really makes it hard for OpenAI to effectuate this plan that they were trying to.
So let's get into the next topic here. So I think what Elon is trying to do is try to put the OpenAI board in breach of fiduciary duty. Mm-hmm. So he can set up for a lawsuit, and ironically, he might be suing in the Delaware courts.
I'm having deja vu.
And for it's not minority shareholder rights in Delaware courts. Now,
please not judge Kathleen McCormick. I'm going to lose my mind. You have to buy OpenAI for $97.4 billion.
I don't know if they could force Elon to buy. I don't think they could do that because there isn't an agreed contract. Yeah. But
with X, there was much more of a structured actual contract waiving further diligence, and that was kind of what that hinged on, was they couldn't waive, or they all the like bot issues and everything that Elon was raising. They're like, well, you waived that right, which is a fair point. And I think that's why he was forced to acquire X. And I think or Twitter, and with this situation, it's completely different.
Yeah. Elon waived due diligence or whatever. It's like kind of like waiving the home inspection when you buy a house.
Yep.
As is. So there's a potential that they could call Elon's bluff, but I don't think they want Elon's group to control OpenAI. That it could happen, and I wonder if Elon would fire Sam, because he said
how would he not? I mean,
he said he's had problems with Sam's, right?
Yeah, I mean, he called him it wasn't a grifter, a swindler. Swindler, was it?
Swindler, yeah.
Yeah, I don't think you leave someone that you've called a swindler in charge as CEO.
Mm-hmm. And then if you get rid of Sam, what happened the last time they got rid of Sam is everybody threatened to quit. And that's why they brought Sam back, as like, that's one reason why they brought him back, is the whole OpenAI team threatened to quit. So I don't think it'd be good if Elon's bluff was called and they end up buying. I don't think it could be forced at this point because there's no contract yet.
Well, let's talk about that a little bit, though, because I mean, that's at least one of the scenarios is if Sam and the Microsoft and everybody involved in the decision making here is trying to go down this path that they were talking about, where you basically spin out the nonprofit, or spin out a for-profit that then acquires some of the IP and the other assets from the nonprofit. If you kind of go down the legal course of doing that, and that was already a legally tenuous path to begin with. I mean, there was not a lot of case law that would support what they were trying to do. And so they would have had to presumably walk a tightrope in order to kind of pull that off in the way that they were envisioning. If they are going further down this path now, and then they find that like their hurdle rate is that much more difficult, or the economics to them on the back end are going to be, much less attractive than they were thinking, maybe they do either. I mean, I think your options at that point would be to just leave the existing structure in place or to take the deal, right? And so there could be a scenario where they just realize that, like, we're probably not going to win a legal argument around, this like very novel approach that we're trying to do. And so maybe the best course of action for, to be a fiduciary, as that question said, is actually to accept this deal. And so from there, there would be some more serious negotiations, and a more legally binding document would have to be produced at that point. But in that scenario, that's not completely unrealistic that could happen. And then we could get into the whole, Elon selling shares to fund this type of scenario again. I think we're a ways away from that, but it is a real risk, I would say, that Elon could be going back to the well again to sell some shares to fund yet another kind of passion project of his.
Yeah, and along those lines, people criticize Elon because he sold his shares on the open market before. But what I'll share is, like, there's no one just hanging out with $10 to $20 billion just waiting to give Elon a special deal on selling his stock. And
dark pools, Bradford, dark pools.
There's no dark pool buyer. So you've had a number of board members selling Tesla stock. It's been going down. The dark pools didn't stop it from going down. There's nobody just hanging out with 20 billion wanting to buy Tesla stock from Elon for like even a 5% discount. So like it'll sting if Elon does have to sell some Tesla stock to finance this. All right. So Matt, you want to read this one?
Yeah, Breakfast Pizza asks, do you think there's any significance behind the $97 billion offer, and also that the offer would match any competing offers? The first part, it's hard to say. I mean, it's roughly around double the kind of last reported valuation I had heard for around OpenAI. Now, I could be kind of wrong on that, but the significance in my mind, I'm curious if you have a different opinion, Bradford, is just that you're significantly raising the watermark in terms of what they'd have to pay that nonprofit entity. And to me, I think that's the whole point is you want us to go really high. Now, like, you don't want to offer $1 trillion or some like insane number, because then like you have to get called out on that and pay for it essentially. But I think, I mean, when you look at the details around that, there was a significant amount of other investors that were already lined up to do this. So I think that was a number where Elon felt very comfortable he could actually finance if he were forced to. And that's another kind of aspect that we want to get into if this does become a little bit more serious. Like, how much capital do you think he actually has to contribute toward this? I don't think debt would be very likely, at least in a meaningful way, in the case as it was in Twitter. I think it's just a completely different situation where that wouldn't really work. But yeah, it's I don't think there's significance to the number particularly, other than you're significantly setting that bar higher. But I'm curious your thoughts, Bradford.
I think you covered it well, but we got another question here. So what if Tesla were to put 36 billion of their cash into OpenAI? So they do need some cash to cover like some kind of recession scenario. I would not be in favor of Tesla buying a chunk of OpenAI just to kind of block Sam. Matt, how would you vote on that?
No, I mean, you have to look at it from a Tesla shareholder perspective. And like, is Tesla on a path to solve FSD and Optimus and significantly increase shareholder value that way without any significant acquisition? And I think, yes, they are. Now, you could probably argue, especially with Optimus, that some of the OpenAI stuff would maybe accelerate that. But then you've got to like unwind all the entanglement that they have with Microsoft, and that gets kind of messy. And like, so what at the end of the day, what are you really acquiring? Because it's not like the compute. I mean, it's a lot of the algorithms, and Tesla has real world AI that, you know, Elon says all the time is second to none. So yeah, I agree. It kind of sounds nice on paper, but I don't think there's actually a whole lot there that would be synergistic for Tesla when their own AI team is so phenomenal. Like, I don't think Tesla really needs an LLM. There's a lot of open source stuff that they could get to help with some of the Optimus tasks that I'm sure would benefit from a more advanced LLM than what Tesla has. So yeah, that's my thought.
OpenAI is probably ahead in voice recognition.
Yeah, it's really good.
The voice interacting. Ideally, you want to be able to have voice interaction with Optimus. And there's an open question on whether the chip that's inside Optimus can handle everything, including voice and listening and all that. So to give you a little explainer on this, so you have like the fine controls of the hands, you have all the servos, the actuators, and you're checking the electrical current, you got the video input, and that needs to be very low latency just to keep the robot upright, but also to have that fine motor control. And one thing I wonder is if the computer can do that and also do like policy control at the same time. So what I mean by that is, okay, what task is it doing? So like, let's say the robot's at a station and it's messing with some batteries and you want to go have it do something with inverters or whatever. If you can't communicate the task to it, then basically you'd have to like change the station to you move the stuff from the station to like signal to the robot. So that's a question, why they might need some large language models, but they could get that from XAI at this point.
Yeah.
There's
or
also
the open source
language
ones.
models. Yeah, open source models. We're using some of those open source models ourselves.
Yeah, and kind of interestingly, the Figure AI is dropping OpenAI right now, or Figure Robotics, whatever they're called. So I'm kind of skeptical on what's going on with them in general. But if assuming there's no kind of weird situation going on with Figure and they actually have just found a better way to do it, then that puts even more, I think, weight in the case to be made that you really don't need OpenAI's technology in order to make humanoid robots much more robust.
So today we had a trifecta. Bitcoin sold off, MSTR sold off, Lemonade sold off, and Tesla sold off. I hear Warren Buffett he's been saving up. Do you think he buys Bitcoin, Tesla, or Lemonade?
No, so that was this was a joke. If you look in the comments, this was I think a comment relating to the investing in OpenAI. Yeah, I cannot imagine Warren Buffett wanting to invest in OpenAI. And that was that commenter did say that he was joking. So yeah, like we can comfortably skip that one. I think Warren Buffett is probably feeling very comfortable having so much cash on the sidelines like he has right now.
Do you think there's any chance he buys Tesla? Buy some Tesla shares?
People have been talking about that forever. I don't think he does. I mean, he's such a well-known value investor, and with Tesla trading at 100 plus, trailing PE or whatever it is right now, there's that very clearly doesn't fit his model. In order for him to like see the value in it, he'd have to like understand the implications of robotaxi and why Tesla has a significant cost advantage in that, and like that's a level of nuance and like tech heavy investing that is just like he's never invested that way. So I don't know why people continue to kind of think that would be awesome. I mean, I guess it would be awesome, but that's just not in his playbook. That's not the way he operates.
let's talk a little bit about Uber. I've been hearing
Ooh.
on X that Uber has 170 million monthly, or I don't know if it's monthly active users that are doing rides every month. Um, will that give Uber a scale that benefits them over Tesla, as Uber just kind of magically solves autonomy at the same time Tesla does? Um, what are your thoughts on this
Yeah,
advantage that Uber has?
this I only ever hear this case being made by people who own Uber, and they're like, "Look, like they're gonna figure it out. Like they've got this huge advantage that Tesla doesn't have, so Tesla's gonna have to buy them, or like Uber's just gonna like everyone will solve autonomy because obviously that's a super easy thing to do,
Uh-oh, Matt froze up, so he'll be
and then
back in a
Uber's gonna have
moment.
this huge advantage and the network effects."
Just hang out 1 second. He'll come back. Um, so there's a question. Any chance that June robotaxi launch is on time? I would think so. I'm curious how many cyber cabs they want to do all at once. The only thing possibly holding that up is, how many cyber cabs they want to launch with and what the service area is. Um, could you um, could you make that point again about Uber, Matt?
Yeah, so I'm not sure exactly where I cut off. Well, I'll try to make it slightly more brief. But basically, like only Uber shareholders are the ones that I see kind of making this point. Although interestingly, Bill Ackman did go long Uber and kind of made a post about it the other day. But I think his insights on it were not quite on point, and because he wasn't looking at the technology. He's basically saying like Dara is an amazing operator, which is obviously true. I mean, he's created a
Yeah.
huge amount of shareholder value. Like you can't fault the job that he's doing. But like this is like a meteor coming at that entire business model. And I think the only way that you can adapt is by like partnering with Tesla in some way, or just kind of hoping that Tesla doesn't solve it. Because if Tesla actually does solve it and they launch their own network, they will undercut Uber. Like it's a binary event, either that happens or it doesn't. But if it does, like Uber is in significant trouble. Like I really don't see any sort of scenario where there's like some sort of partnership or like in non-Tesla driven autonomy solutions are implemented for Uber drivers, because like ultimately you're competing on price. In Tesla, like we've done the hard work to know that like, Tesla can undercut all these competitors on price. That's why we're so bullish on this.
Yeah.
So
Because you're not paying for a driver.
you're not paying for a driver, and you've got the lowest cost sensor suite, and you've got the most efficient drivetrain in terms of your watt hours per mile, and you've got the lowest cost to manufacture the vehicle itself. So it's like every single advantage that Tesla's been working on for the last decade plus, it all translates to lowest possible cost per mile. And that's the point that I think all these Uber bulls and Ackman and Gary Black and all these other people, they don't ever admit that that's a reality. And I guess it's not a reality yet, to their credit, but if Tesla does what they say they're going to do, it's going to become a very painful reality, I think, for Uber investors.
Yeah. What I know, people, when you ride Uber and Lyft, you're paying at least $2 a mile. It's usually in excess of that. Tesla can roll out a service at $2 a mile or less, and that would be savings for people who are riding it. And most of the people riding Uber and Lyft are commuting to and from work. That's not how I use Uber and Lyft, but that's how most people do. And they don't have enough vehicles in their household. They're forced to use it, and they're price sensitive. So even if they're not early adopters, I'm thinking that they'll try it anyways. What do you think about that idea, Matt, where your typical Uber customer may not be early adopter, but because it's a lower price, that they would try it out?
Yeah, I think that's true. And I think, to be clear, it takes a while before this becomes a real problem for Uber. I mean, for Tesla
Yeah.
to scale up, and like we are talking probably 3 years out, I think,
Yeah.
before Uber starts like actually feeling pain. But yeah, I mean, these are very price sensitive customers. I know ARC has done a lot of really good work around the price elasticity of rideshare, and it makes sense. And I mean, if the kind of core power users of Uber today are extremely price sensitive, as you noted before, which is very obviously true, then like having a lower priced option, which by the way also gives you like a better customer experience and user experience, like even though they might not be early adopters, they'll do it for the economics and for the overall user experience. So I mean, I just think this is a very big problem for Uber, and it's one that I think the economics will drive it. So if you haven't really modeled this out in detail, I can understand why you'd come to different conclusions.
Uber, they have an investor deck. I think it was 22 or 21. They did an experiment where they offered Uber rides at $1 per mile. And what they found was demand was 20 to 25 times higher than otherwise.
That is bananas.
I don't know if that's versus $2 a mile or versus like their average price, but that just goes to show you like how elastic, price elastic the demand is.
And this is such a core point, because like when I hear Gary talk about this, he's like, well, look, the total TAM for rideshare is whatever many miles it is. Let's be generous and triple it. Then like even at those economics, and assuming Tesla gets whatever, it just doesn't really move the earnings per share that much. And I was like, there's nothing wrong with your math. That is completely like accurate. Where I take issue with is the price elasticity. Like if you've got a better product at a lower cost, you're going to have a lot more than 3 times the existing market in terms of miles driven. And as you continue to go down that price curve, and you actually get to the point where you are undercutting the did I cut out again? Dang it. Then the TAM just increases all that much more. I think you get to unfathomable kind of miles driven level when you actually are kind of undercutting private car ownership, that seems like an inevitable outcome in the long run to me.
All right, we have a Tesla Q question, Matt. That's about the Model Q. I hope they call it the Tesla Q. Do you think we'll actually see it happening in the first half of this year? There's absolutely zero leaks, pics, or info from any hundreds of new suppliers. It seems impossible.
We had zero leaks with the Cybertruck either, I will remind everyone, which also seems impossible, especially given how radical that design was. So, no, I mean...
But they had Tesla, 4 years with the Cybertruck.
Yeah. It is kind of amazing that we never got, even like hints at what would be, you're saying between when it was revealed and when it was launched? Yeah, that's a fair point. I don't think it's going to be some drastic redesign like the Cybertruck though.
Do you think it's going to be the same as the Cybercab? But
I think it's going to be a very similar form factor, probably, tweaked for personal car ownership as opposed to like only rideshare. So, like a trunk that's a little bit bigger, and 2 front row, the front row seats wouldn't be like, that economy or that business class, whatever, probably just a slightly modified version of that same one, I would imagine. But this is something that was I think it was in the Q3 report, reiterated in the Q4 report, that they're going to launch multiple vehicles will launch in first half, including lower price variants. So I'd be surprised if they reiterated that again in Q4 and then don't deliver. Maybe it's July or something like that, and they technically miss, but I think they'd hit it.
So before we answer this question, I've been saying for like 4 years that if Tesla introduces a compact vehicle, they're gonna, I think they essentially launch it the same time that they're making it, because it could definitely Osborne some of their other vehicles or cannibalize some of their other sales. What do you think about like a simultaneous launch to production? Because I think it'd be a really big seller, and they
Mhm.
bare minimum, like the risk of doing it at the same time is that they don't sell initially. But I gotta think that bare minimum they would have heavy orders for it in the first few weeks that would cover their initial production. What are your
Yeah.
thoughts?
I mean, it seems very likely to me that they would do that. I mean, they didn't say like reveal a product; they said launch a product. In first half. So it would certainly be unconventional from the way that they have done things in the past, and frankly, the way that like every car maker has done things in the past.
Mhm.
But to me, that makes the most sense. That'd be the most obvious, way to introduce this is some variant of the cyber cab that is tweaked and you could launch it right away. That would certainly help kind of production and delivery numbers for this year. I think that's something that maybe the analysts aren't taking into consideration for the second half of the year in terms of volume ramping. But yeah, I would actually be. So I'll go so far as to say I would be surprised if it does not launch in the first half of this year.
Would the stock sell off if the lower cost model is just the Mexican version of the Model 3 where it's got, lower trim and all that?
Yeah, I think so. I mean, maybe not that significantly because I don't think there's a whole lot of valuation credit, being priced in right now for this lower price unit.
Mhm.
So, but that would, I think raise a lot of questions of like, oh, really? Like that's what you guys were talking about this whole time is, basically just like you remove the vegan leather and you put it in cloth and you're calling that a lower price variant. But they said new models. That's why I think that's
Mhm.
unlikely. So if they call the Model 3 like the Model Trace and and like call that like a new model, like yeah, that's kind of some BS. And the stock probably justifiably would sell off a little bit on that.
It's just so nutty to me that here we are, FSD is as good as it is, and the stock's just kind of wobbling on these, quarterly concerns. Um, it's still our secret. It's our little secret, like how good uh, the cars are driving themselves now, and
Hmm.
it's there's so there's so few items on the list that they need to correct now for the AI for cars, the hardware for cars, that I think they're going to get there by June. I believe it'll happen. Um,
Well,
so it's
on
just
that point
crazy to
too.
me. Like I would have thought, like if it was this good, like I- yeah, I was worried I'd never be able to buy the stock at a price I'd like again.
Yeah, I mean, I do get the sense, and of course, we could be wrong about how this plays out, but all these concerns that we spoke about, in the short term, seem to be kind of carrying the momentum, and we wouldn't be surprised if that happens for 3 more months. But like, how long can this really be a secret? I mean, I honestly would have thought, years ago, if you told me, okay, at the point at which FSD gets this good, just like experiencing it, what would FSD take rate be, at least in the US where jurisdictions are, where it's legal? I, I'd have a hard time imagining, especially if it's priced at $99 a month, that it wouldn't be, I don't know, like 50% plus take rate on FSD. And it seems that we're nowhere near that level right now. And the stock, like, it just seems like it's a secret. And I don't understand that.
Mm.
I don't understand why this is not more like widely acknowledged that they are leading in this way. So it's a great thing for us, honestly. But yeah, I did kind of feel like we were this, you know, kind of subculture that was ahead of Wall Street back in 2019. And it was like, yeah, like they don't get it. We do. And I'm surprised that we're still here again in that same situation. It just, for a $1 trillion market cap company to be in that situation, it just doesn't make sense to me.
Yeah. All right, so we'll ask Tom's question now. I'll pop it on the screen here. Jordan, you're too fast. Go ahead, Jordan. How should Tesla investors think about potential brand damage in the US, Europe, UK, and Australia? So it's like the Five Eyes countries, I guess. So my thoughts are that Elon is generally creating more goodwill than he's destroying. I think a lot of the arguments against Elon right now aren't addressing what's actually happening. So they're not talking about the fraud that's being exposed. They're just saying, "Oh, we don't like that. It's a bunch of teenagers doing it. We don't like that they get access to the systems, even though it's read-only access. We don't like that they're seeing private information." and so they're spinning this. Potentially they might be take things too far politically. Like, I haven't heard of any controversy with like the Wall Street Journal getting money from U.S. aid or whatever. It's only been other publications that have gotten those fat government subscription money. Maybe Wall Street Journal doesn't have a premium offering, but I worry a little bit that they're playing politics with what they're pursuing. But I think there's a lot of libertarians out there who are would prefer a smaller government. There's people of different stripes. There's people that are just sick and tired of paying a lot of taxes, and having it wasted by government on things they really don't agree with, or it just doesn't help them. It doesn't help Americans. What are your thoughts here, Matt?
Yeah, I mean, I think it's a real-ish risk. I think we all know, at least early on, EV buyers were overwhelmingly, left-leaning and Democrat. I think that's evening out a little bit, but I would certainly expect that is still the case today. That there's more of the Tesla customers are left-leaning than right-leaning. So it probably does hurt, and especially in I think just the culture in the United States seems to have shifted in the last basically since the election. I would say like there's just a lot more people speaking out where I think they would have self-censored in the past. You can argue whether that's a good thing or not, but I don't think that's the case in those other countries that were listed in this question. So if they are really thinking that Elon is this horrible person, in Europe, UK, Australia, Canada too is another one I'd add to that list. Then it would not surprise me at all if we do see some continued softness in those markets. So yeah, that is kind of what it is. I mean, I guess where I land on this though is we're at the point where like I'm very close to not caring at all about like sales, like production and delivery numbers, anymore. We still have to care about it because that's the way the company is funding itself. But we're like 2 years away, I think, from the financials being significantly changed, where it's software related revenues that are really driving like the earnings growth, quarter over quarter, year over year. So like maybe this is another kind of short-term bump, but I think like where the story really is what's happening with autonomy and eventually Optimus. I really can't wait to shift my focus to Optimus because that's going to be really nutty in terms of the margin potential.
Yep. So let's end it there. Matt, congratulations. Number 7.
Thank you. Yeah, it was so I was out for 2 weeks. Do have number 7. Yeah, I will tell you and all the listeners here, I've got a huge amount of respect for all the stay-at-home parents out there. I did 2 weeks of my wife's job, basically watching the 6 kids and breaking up fights and feeding them, and then cleaning the kitchen, and then doing that routine 4 times a day and keeping up with laundry. And I was exhausted, and I still kind of am exhausted. Got back to work for the first time yesterday, and I was having a very hard time kind of keeping my attention up. I'm feeling a little bit better today, but it is a very hard job and very thankless. So much appreciation to my wife for all the work that she does, and to everyone who's out there raising kids. It is great work, but it is very hard and physically demanding work.
Awesome. Well, with that, I'm going to say bye for now.
Bye for now.